Hello everyone. So now on this analysis, on this session, we will be discussing volatility index, right? During the course of the week, I did send some analysis based on volatility index when the market was still at the bottom. And then I have been sending more analysis and updates on volatility index as well in terms of like what to look forward to in terms of trading. Right, so now let's get into it. So looking at the volatility index right now, we're going to focus on the current price where the market is currently trading, right? So we have seen a huge push to the downside, right? So when we saw this huge push to the downside, the first question that we had to ask ourselves is that why did that push to the downside? Okay, so we have had a resistant level here. So right, so once we had this resistant level, what occurred is that the market formed this resistance level initially. This was a support now turned resistance. So this was initially the market retested this level that it broke out of, pushed price to the downside, came back again to retest it for the second time, and then came back again to retest it for the third time. And then we had a fourth retest, resulting in the formation of R1, R2, R3, and R4, right? So that's the reason why we had that push to the downside. So now when you look at volatility index, currently the market is moving in a range. So the market has been moving in a range. So we are yet to break above or below this range. So remember that whenever the market moves in a range, we view it as a consolidation, right? So, and then the consolidation, for us to be able to trade it, we need to see at least 1,000 pips in between them. So that is when we're looking at it in terms of currencies. But when we're looking at it in terms of volatility index, it's still the same concept, but yet with a bigger spread, right? So this is one thing that we have been seeing right now. So what we'll be looking at is that we'll be looking for the market to kind of break above this resistance, therefore tapping into this area that consists of large levels of liquidity pool, right? So again, once we had this deep correction whereby the market retested the daily demand zone. So the market did retest the daily demand zone. So this is a retest of the daily demand zone. So after we had that retest of the daily demand zone, so the market just continued rallying or pushing to the upside. So now the question is that what do we need to do, right? So now we start doing something called top-down analysis. Remember that the main objective of top-down analysis is to look for potential entry positions where we will be in a position to enter long position in this case while minimizing our risk. That's the most important thing. At the end of the day, we're looking at it as in like, how can I minimize my risk while obtaining the best possible pips or potential move in terms of the upside while keeping my risk very, very, very low, right? So now this is our daily demand zone that got tested. After that, we have created another daily demand zone. Remember that once this demand zone has been created, therefore tells us that the market is starting to form a series of higher lows. So we've got higher lows formation. So what we'll be looking at is that we'll be looking for a potential retracement for the market to retest this level before continuing. This is based on a daily time frame. So currently daily time frame, we are approaching the supply zone. This is the daily supply zone, but now you have to look at it in terms of the momentum. Look at it in terms of the momentum. So whenever the market is in this kind of momentum, chances of a deeper retracement, they are very few, or they are very small. Just basically look at this area here where we had the bull run. So one thing that you have noticed about volatility index is that it doesn't make retracements that much, right? So it doesn't make deeper retracement. So once it starts pushing to the upside, chances are it will push to the upside up until that entire move is done. So we can expect a bit of a push to the upside up until the resistance level. So, but what we need to see occurring is that we need to see the market kind of moving in a wave, right? We don't want to see the market just pushing upwards, resulting in formation of bullish candlesticks after bullish candlesticks, and then engulfing bullish candlesticks, because that will result in the market giving us a potential R5, right? And we don't want that, because we want the market to break above this area. So we want to see it moving in a bit of a wave. So we want to see it making an impulse and then a correction, and then the last leg of the impulsive phase is the one that's going to get us above the resistant level. So that's one thing that we'll be looking forward to. So now let's move on to the 4-hour time frame, right? Because we do understand where the price came from and the reason why we had that push to the upside. So now when we move to a 4-hour time frame, there are certain concepts that starts playing a role, and that gave us an indication of why we should expect a push to the upside. Remember that when the market was pushing to the upside, we had something called an impulsive phase, right? So the retracement that came upon this push to the downside, it was due to the head and shoulder pattern that resulted initially, right? So this is the head and shoulder pattern that formed initially. This is the head and shoulder pattern that formed initially. The movement was completed around this area here when the market was pushing downwards towards this swing low that was created previously. So now the head and shoulder pattern movement is complete. We're done with it. The movement is complete. We're done with it. So now we start looking at it again from a different perspective. We say that when the market was retracing, how was it retracing? That retracement, how was it? Was it in the form of a consolidation, or was it just a push to the downside, or was it in the form of a channel? Was it in the form of a wedge? Was it in the form of a pennant? Those are the questions we need to ask ourselves before getting into any other position, or before we can start looking for potential long position, looking at it from this current price movement. So now the first thing that we realize is that, okay, this is what we had initially, right? So what we had initially, we said that, okay, the market, we will be looking for potential short position upon the retest of the lower trend line. This is initially what we had. We said that we will be looking for potential long position upon the retest of the lower trend line of the bearish wedge. This is a bearish wedge. So we have that retest, the third retest. Normally when the market retests the lower trend line for the third time of a bearish wedge, maybe bearish pennant, bearish channel, normally what occurs is that the market starts moving a bit further to the upside. So this is what we are seeing currently on the volatility index, looking at the 4-hour time frame. So now when we look at the 4-hour time frame, the first thing that we see is that the market broke above this area, right? Broke above the upper trend line of the bullish wedge, of the bearish wedge, right? The 4-hour bearish wedge, the market broke above, but has yet to retest the level in which it broke out of. So now once we start seeing a retracement, the one thing that we'll be looking forward to is that we'll be looking to take long position upon the retest of the level in which the market broke out of, which also confluences with the retest of the broken upper trend line of the bearish wedge. This is the level in which the market broke out of. It's yet to be tested. Also confluences with the breakout of the upper trend line of the bearish channel, bearish wedge basically. So if we do get a retest around this area, so we'll be looking at the momentum. So there is a potential retest upon this area here, the level in which it broke out of, and then a potential push to the upside. That will depend mostly on the momentum. We need to measure the speed in which the market is approaching this area before we can start taking long positions. So if there is an opportunity, we will try and take long position while minimizing our risk. So, but if there isn't any opportunity, we'll just wait for the market to kind of push a bit further to the downside, retesting the broken trend line, also retesting the 4-hour demand zone, right? So that's the one thing that we'll be looking at. So we'll probably be looking at this area here, right? This is the demand zone. So we'll probably be looking at this demand zone to kind of provide us with a bit of rejection. That's one thing we're looking for. We're just looking for that rejection, pushing the price to the downside, resulting in a correction before we can consider taking long position. So now the question arises, why did the market make this push to the upside? Why is it so aggressive at this current time, right? So the reason for that aggression is because of the inverted head and shoulder pattern. So we have the inverted head and shoulder pattern. So this is due to the inverted head and shoulder pattern. As the market pushes to the upside around this area, it will be the completion of that inverted head and shoulder pattern. We can start seeing a retracement to retest the neckline of the broken inverted head and shoulder patterns neckline, which also confluences retest of the level in which the market broke out of, which also confluences with the retest of the potential spike to the downside to retest the demand zone that is recently created on the right shoulder of the inverted head and shoulder pattern. And probably we can even have a deeper correction. But the most important thing right now is just to understand how price is moving at this particular time. So, right. So that's basically how you would look at it from a 4-hour perspective, because again, remember you had an impulsive phase. This is our impulse. This was our impulsive phase, still is impulsive phase. This is our impulsive phase. Again, once you have that impulsive phase, we currently within the last leg of the 3 cycles that makes up a wave, which is our impulsive phase. Here we have our corrective phase, which we just recently broke out of. So corrective phase, which we just recently broke out of. So this is one thing that we'll be looking at. So once you move to a 1-hour time frame, that's where you'll be looking for. Like on this position, I wouldn't suggest hedging. Just wait for a retracement at long positions. Do not hedge, just retracement at long positions, because the momentum is too strong for you to consider taking hedge positions. So now we'll just be waiting for a retracement before we can consider taking long positions. So that's one thing that you need to take into consideration. So we'll be looking for a potential rejection around this level here that might end up giving us a bit of a retracement upon the retest of this level. So we just have to be patient, because we understand where we came from, and we just have to be patient and wait for our entry to come so that we can execute long positions. So if you did take long positions around this area when I sent the analysis, so you probably be in profit, just break even and then let the trade run, because we still have a long way ahead of us. There's still more room for the price to move upside. So once you get a retracement at long positions, and then push the price a bit further to the upside. So if you have any questions, make sure that you send me a DM so that we can talk about it.